Welcome to StockOdds, Odds and Podcast. I'm Dave Singh here with Rob Friesen, trying to get ready for the week ahead. Good evening, Rob. How's everything?
Hey, good. Thank you. We didn't do one last week because of July 4th holiday there, so everybody was out with family events, and but here we are. We're here for you this week. I mean, I don't know how you survived last week without us, but here we are. Okay.
Well, I had to swim and barbecue. I couldn't sacrifice that.
No, I know, but I mean, how do our listeners survive if we don't do a podcast? I mean, it's crazy, right? So anyway, here we are for you today. So why don't we kick it off with? So this week we have a fairly significant event, which is on the 13th, Wednesday, which is the CPI numbers, and they, they're closely watched. These are the June numbers, but we have a little bit of inflation stuff tomorrow morning about 11 a.m. Eastern time. So there's a bit of banter on 3-year inflation expectations, but the bigger picture is what happens with the CPI. So let's just talk about, where the futures are now, including some of the commodity futures. So I'll start by running through the financial instruments here. We've got the Dow Jones futures are off 158 points or 0.5%. What's interesting about that on a daily basis is, if you look, is we had last week ended on a positive note. It was a shortened week, but we did rally, and so we finished on an up note for the week, and that puts us kind of in the mid zone here between the last high that we had on the 28th of June and the last low 4 days ago, which was on the 5th of July. So we're kind of sandwiched in the middle of that. So, this question is whether we rally to test that June 28th high or whether we head down to test the July 5th low. That's the best we can frame it right now. I mean, there are other numbers both above and below, but they're quite a distance. So let's frame it by those. And we're softer right now. We've been experiencing this kind of mean reverting market where, a lot of times it's been one day up, one day down. But then, if we have a positive week, then the next week's been down. So that's kind of been how we've been experiencing this year so far. So it would make sense that in keeping with that, we may drift down to test that low from July the 5th. Okay, that's kind of the context of what would be most likely with what we've been already experiencing. So we'll let Dave talk a little bit more if he sees anything on seasonality, but I'll just finish running through here. So the S&P 500 futures. Now, the interesting thing, our futures right now haven't broken Friday's low, whereas the Dow Jones futures already have taken out that low. So the S&P futures haven't. So we're kind of in an inside day with them right now. But the same thing, again, we June 28th high and the either July 1st low. Yeah, July 1st lows is a little bit lower than the July 5th low for the S&P. Same thing though, and we're down right now 0.65% or 25 basis points there. We have NASDAQ 100, which really was the stronger over the last week and a half compared to the S&P or the Dow Jones. So this was kind of an appetite that we saw back into some of these tech stocks. That already happened. We saw it on the expiration in June. We saw them have a bit of appetite for that. And then it came back again here on July 1st. We saw the appetite for tech again. And so they did both the NASDAQ 100 and the Russell 2000, the small cap stuff, had a little better week than the Dow Jones or the S&P. So the distance to travel to take out the June 27th high, so it's not the 28th for the NASDAQ 100, it's the 27th. So that distance, though, is not that far away. Heading back down, it's a much greater distance to go and test the June 29th low, not the June 30th or July 1st. So a little bit different of a shift there for the NASDAQ 100. We're off 112 points on that and down 0.89%. Russell 2000, it's again an inside day at the moment. We'll have to see how that is tomorrow morning when things open. We're down 14 points, 14.5, 0.82% down. And that is similar to the NASDAQ, not quite as strong overall for the week, but it fared pretty well. The interesting thing with the VIX is we pulled back from a spike up to the 34 level, and we pulled all the way back to 26. It does look like it's positioned to rally up a little bit, so that would be in keeping with the market rolling down, the VIX moving up. Okay, now to all the futures and looking at things like the US dollar, it's quite strong, up 0.249 right now. It's been a real flight to quality for this whole inflation argument, or even the recession argument. I'm really concerned about Europe overall. I just think that this war has so much greater implications for Europe, and the euro. Look at the euro dollar, how it's been selling off, and the U.S. dollar rallying. I'm just very, very concerned for Europe overall. I think it doesn't have. I don't even think it has anything close to the tax base that the U.S. does. As far as money coming in, and they've got to deal with all this energy problem, and proximity to the war is so much different too. We're a little bit more removed, but anyway, concern there for sure. Also, China, we've got just a note. Avoid casino stocks this week, I would think, because Macau is kind of locked down. They're using casinos for quarantine places and so on. So they're kind of shut down. And then we've got subvariants again in Shanghai. And then we have the Bank of China and three other banks have liquidity issues. Since April, some of the deposits have been frozen, and people still can't get that. So there's a lot of protesting in front of these banks and so on. Their financial system overall, China, is 54 trillion, much larger than the U.S. System. But the banks are having some liquidity issues, and you never really know overall what's going on in Russia. So this is affecting, when you combine the recession outlooks with China's slowdowns too, this is putting pressure on metals and even oil, even though oil should be rallying because of the war and other things like that. It's been pulling back a little bit too. So oil is a real tricky one to play. If you want to play in the group of oil, I suggest pairs, good oil pairs, and I also suggest long short baskets within the group. When you take a directional side on oil, you can be really right or really wrong. I think it's just hard to read sometimes. So that's my advice. Look at copper if you guys want to take a look at something. Copper on the weekly has been really a tell. And the 1 week that ended on July 8th, we did rally back up from the low, but what an incredible move down. And the weekly has taken us all the way back to the highs from 2018. So we've erased a lot of the gains that we had in 2020 and 2021, and we pulled all the way back to 2018. It's a remarkable move, and that's signaling to me, recession, slowdown globally, things like that. Because you'd think with all the EV focus and, just the whole environmental energy thing, that copper would be one of those desired commodities. And I think it was. I think that was the story, that we were anticipating that. And then, of course, with the war starting this year, and then with the inflation that started last year, and we kind of had more full blown of that now, this copper story has really sunk. So, so I'm not really super excited about basic materials. Oil is kind of iffy, and it just seems that people have gone out and they're putting money to work in some of these small caps, and some of the techs have been of interest again. And then, of course, you've still got your healthier value propositions, which may not perform on a day where it's risk on, but overall for the year they've still been performing much better. So it's a case of whether you hit it right on any particular day. If you just want to say, oh, today I'm going to play value, well, if it's a risk on and they're buying tech stocks, that value is going to lag substantially. Isn't that what you found, Dave?
Yeah, I agree.
One more thing here on the inflation side of things. There's real problems when Costco raises the price of rotisserie chicken and the food court prices. Now there's real inflation, okay? Over to you, Dave. Give us something good here.
I'm scared. My $1.50 hot dog combo is going to go up, right? Well, we're approaching mid-month seasonality here. It starts on the 14th, which is Thursday, and that's after the inflation numbers coming out Wednesday. But it could be a nice play. So the month of July, the SPDR's expected to do plus 2.7% in general, but for mid-month, it's 0.34. So it's a good fraction of that. So I went to look to see which sectors might be better as longer or shorter than going with SPY. So the ones of interest would be to be longer: utilities, financials, chips, SMH, some healthcare, QQQ, XLK. So a lot of financials and technology, and especially chips, might be better longer plays for the mid-month seasonality. And things on the shorter side would be materials. That ties in with what you're seeing with copper. Oil tends to be weaker during this period. The diamonds, XLC, industrials, staples, discretionary. So those are the general ETFs. And then I thought I'd look a little more granular, since we do expect financials to be one of the better longs. Which symbols within the financials might be better? And things like JP Morgan, Bank of America, Visa, MasterCard, Morgan Stanley, Schwab, these tend to be pretty robust in this window, whereas things like Goldman Sachs and American Express are weaker. And then I did the same thing for the oils. Chevron, ExxonMobil would be good shorter plays. And we have some interesting ones in the chips as well. So Broadcom, ASML, LRC, those are better longs, and things like Intel, NVIDIA, Texas Instruments might be better shorts. So if you get granular with the screener to look within components of the SMH or components of the XLF, that might be a way to put some pairs on during that seasonality window. But the general themes, again, are being a little bit longer financials and tech, and shorter things like oil and some of the chips. So it's kind of mixed there, but there are some opportunities for that. And there are some earnings trickling out throughout the week as well. We've got Pepsi on Tuesday, Delta Airline on Wednesday. Friday, some of the financials like BlackRock, Bank of New York Mellon, Citigroup. So that's going to be probably throughout the month of July too, trickling in here, individual news and earnings stories. So I guess you have to be pretty good with vetting your symbols in the morning to make sure you're kind of excluding them or considering the earnings for some of these as well. But that's what I have on the seasonality stuff here.
One thing I want to mention with the seasonality is, say it starts on Thursday and we are sort of post the CPI. So, I mean, people might be playing a little bit of a wait and see attitude for Wednesday, and it could be a market mover.
Mm-hmm.
So when you get to the end of that day, you might have some stuff that's quite displaced relative to how it's supposed to perform for seasonality. So that's one of the edges is, where's the greatest discrepancy between, what is and what will be. And that can give you a real advantage versus, I'll give you an example. If something, let's just say seasonality was to be long basic materials, or let's say consumer staples. So you want to be long consumer staples, but let's say you end on Wednesday and, Monday, Tuesday, Wednesday, they performed really well. And so they're really hot and at a premium. That's not as great as if they got knocked down for the 3 days before that window, and yet the window says they're supposed to perform well. That gives you a better starting point, a better advantage, right? And I'm not saying that's a guarantee. It's just that you're looking for these types of edges. And one of the longest running things that we've utilized is not so much relative strength, but mean reversion, looking for things that have been extended and, can retrace, relationships that get disjointed and out of place. Looking for things ahead of a window like seasonality that are discounted or at a premium, and looking for them to revert. So just keep that in mind. It's been very valuable to focus on where can you get that mean reversion from.
Mm-hmm. Well, I think Wednesday might, with the inflation data, that may skew things out of whack, and then that could be a good opportunity come Thursday and Friday.
Yeah, it certainly could be. I mean, we've seen this movie before where one day they're all about, it's the end of the world with inflation, and the next day, we're probably at peak inflation pretty soon, so it's going to be going down from here. Well, nobody knows, and the argument is, both sides have favorable things to say and things that should be considered. Look at how many talking heads have various opinions on everything, like whether this is short term, long term, whether it's, we're going to go lower, whether we're going to go higher from here, whether this is buying opportunity, whether it's still a selling opportunity. I mean, there's so many mixed messages. I don't know how investors, figure it all out. And that's probably why, they hand over their money to someone else to look after for them, right? Or you just go into an index, or you just buy a mutual fund and just, hope for the best. But if you're going to be active, and this is really a trader's market, traders have to consider the macro, and they have to consider, some of the technical implications. And traders can use statistics like StockOdds to, already help select things ahead of time, especially get some ideas on seasonality. You don't have to be so granular that you're day to day. You can swing trade, and the best ideas for swing trades are really relationship based trades, because that sort of takes the bigger market risk out of the equation. Not totally, but certainly preservation of your trading capital is a main consideration. So relationship-based trading is the ideal for swing trading for sure. And with StockOdds, you can curate, 3 days or 5 days or a week or a monthly perspective too. You don't just have the open to close day to day. You have more bandwidth than that as far as time frames. Okay, so let's wrap it up. Anything else?
No. Well, have a good week. Good luck.
Okay. All right. Take it easy, man.
Bye-bye.